that there has been depreciation of the naira relative to the dollar. So you're going to have, you haven't paid this debt, remember, you're just accounting for it. So you're then going to have what you had recorded as the historical value of the transaction. Then you're going to have the difference due to the depreciation of the naira, which you're going to post to your unrealized foreign exchange loss account, which is like a provision. Let's just say you're going to make a provision for the increase in what you have to pay, the increase in outflow that you'll have to pay. Mind you, you haven't paid anything as of yet. You are just carrying the liability. But the tax law in section 24 of CITA says that the interest on that debt, which you have secured to finance your operations, the interest payable on that debt, and the word used is payable, not paid. The interest payable is deductible for tax purposes. So you have, for accounting purposes, the fact that you are simply just carrying the liability is not yet recognized as paid because you haven't paid it. But for tax purposes, you can recognize the debt and take that as a deduction for tax purposes, which of course can then translate into deferred tax. But let's leave deferred tax out of this for the time being, just to illustrate the problem statement. So you then put that expense into your tax computation. And all of a sudden, remember you haven't paid. A year later, you then have an additional sum that is also payable. Let's say you pay it in the course of the second year, right? And so sometime in the middle of the year, you have now paid that debt. But you paid that debt at a rate higher than transaction date and higher than your last reporting date. Remember, you've already taken the deduction based on your last reporting date. Now you have an additional liability that you have to find a way of settling. It's sitting in your accounting provision. And depending on how rigorous you are as an accountant, because you're talking about hundreds of transactions for very large companies, you have to be tracking each one of them one by one. So you have that provision that you are carrying for the volatility in the FX. You've taken the deduction already in the past. Are you going to take another deduction in future? That's one question people are not sure about. I think there's a clear answer, but I don't think we need to be giving specific answers on this call. Let's just advise clients to please speak to their tax consultants, and please come speak to us at KPMG as well. We'll be happy to share our insights with you. So what do you do with that differential? There's also the problem of sometimes, even inventory, where you have bought inventory and then you have submitted your bid for FX through your bank, and your application is sitting with the CBN and has been sitting with the CBN for the last 7 months. So you were ready to pay for that inventory on day one, transaction date. You had provided the naira value to your bank to take to CBN, convert to dollars so you can pay your supplier and keep your supply chains active. They've sat on that money for 7 months. Now, naira has devalued. Maybe you need to pay like double what you had put forward a few months ago. Where do you charge that differential to? Remember, in your books, once you tendered that money to your bank, you recorded it as if you had made the payment, right? But you actually didn't make the payment because nothing was sent to your supplier. Now, you have a foreign exchange loss on the value of your inventory. By the way, you may have even used your inventory. Maybe you used it to produce goods which you have sold. And you have now calculated the value of goods sold. And you've determined your taxable profit, if any. And you filed your tax return. And then a few months later, CBN now tells you, yeah, here's your dollar. And by the way, it's 1,003. Thank you very much. And you have to go and look for more money. And then you now want to file, what are you going to do? File a revised tax statement or bring it into your future tax return and say, oh, additional monies paid for last year's inventory. You know, it just begins to get a bit murky. What do you do with that? What do you do with the unrealized FX losses? And that's even dealing, the examples I gave addressed a volatility that ended in a resolution when the exchange loss is realized. What happens when the exchange loss is actually not even realized yet? Because you are not yet, you are still just carrying the provision. And these are very huge balances you are carrying. And you are carrying it for an indefinite future. But then you have modern day realities of determining your tax payout and the relief you will get in future when this liability eventually gets crystallized. And the damage is doing as you begin to calculate your deferred taxes and carry forward your deferred tax assets. And the attitude of the revenue service to components of that deferred tax asset. Let's even say that due to this volatility, because some consultants like volatility, because it's an opportunity for mergers and acquisitions to occur. I mean, intuitively, you want to buy a company to shore up either your supply chain, a backward integration, even a forward integration, or sometimes just to take a market position, right? And you have a company that is rich in deferred tax assets, which makes them, in other countries, makes them extremely attractive to a prospective suitor who is saying, this cash-rich, this asset-rich company, I'm going to target it, combine with it, and use it to mitigate my own tax payout exposures. Then the revenue service will write you a nice letter when you notify them under section 2912 of your intentions. The revenue service will write you a very nice letter saying, we take note that you are about to acquire a beautiful bride. We're very happy for you. Congratulations, wedding bells, whatnot. Oh, by the way, deferred tax assets will not be carried forward. Though. Once you do your integration, deferred tax assets are gone. And you're like, then what's the point, right? So you are leaving companies with assets that FRS is going to say has no value from a future transactions perspective. You're going to put companies in a position where they have to pay out cash with no indication that they will get cash back in future if positions reverse. Those are matters that need to be carefully thought through, talked through, worked through, and in some cases, the tax law is available to help. In some cases, the tax law has to be bent or massaged or interpreted in a holistic manner in order to derive the intention of the legislator and provide relief to taxpayers. In other instances, the tax law may need to be modified to allow relief to be obtained by taxpayers. I give you one last illustration before I give it back to you. You are a foreign direct investor who has brought capital into Nigeria, and you have invested on the stock exchange in some of the biggest Nigerian companies possible. But you are, let's say, an American company, and so your transaction currency is FX, right? You don't do anything with Naira. You are not a Nigerian company. You don't trade in Naira. When you bring your investment into Nigeria, CBN will issue through your bank a certificate of capital importation that will denote the value that you have brought into the country in FX terms. When you are exiting that investment, we've just read that 767 companies exited last year. When you are exiting that investment, because of devaluation, a lot of investors are finding out that their exit value in Naira is positive. But when it is translated back into FX, it's negative. So let's say your CCI says 100 Naira worth 1,000 Naira on the date of investment. On the day you are exiting at 10,000 Naira worth $50. So in Naira terms, you have a capital gain, 10,000 minus 1,000, 9,000. Go and pay 10% CGT on that. In dollar terms, you have a loss, 100, you brought in 100, you're taking out 50. How do you explain to an international investor who you are asking to bring more money into your country that you have taken less money out, you are taking less money out than you brought in? But by the way, on your way out, go and see my brother, the FRS chairman, and pay your CGT tax on that investment. And the guy is saying, how do I pay tax on a loss? And you're like, well, in Naira times, you made a gain, even though in dollar times, you made a loss. So the guy is saying to you, but I invested in dollars. Why should I not be able to file my tax return in the currency in which I invested, which is dollars? You yourself have certified the dollar value to me. Now, should that be something we look at on a temporary basis and give a temporary waiver based on the circumstances of the peculiar circumstances of the moment? Or do we deal with it holistically and just say on a going forward basis, for now and forever, if you have invested in dollars, we will peg you to your investment currency? Mind you, this can work both ways, but in the circumstance of a third world developing country like Nigeria, the mischief is much more in terms of devaluation rather than currency appreciation. But we've also seen the Nigerian Naira appreciate very positively, very rapidly in the last few weeks, inching up, making changes from about 1,800 to $1 to about 1,200 to $1, which is what is about trending now. So it is also possible to have rapid appreciation in the currency. And obviously, what happens when you're on the down low should also mirror what happens when you're on the ascendancy. So this can work both ways, I recognize that, but it's a conversation that needs to be had with both the policymakers and the tax consultants to all companies that are involved in this conversation to say to you, what does the tax law currently say about your situation? Is there a way to leverage the tax law to achieve a more positive outcome than you had hitherto supposed? Because like I said, there are so many provisions around these issues in the tax law that we couldn't cover them all in a matter of an hour or two. Or should we even propose, modifications to the tax law that would provide relief to taxpayers? So those are the three outcomes that could possibly arise as we consider some of the questions.
Okay, thank you very much. I think I'll just make a quick comment, particularly around the example you gave, just for the benefit of our listeners who perhaps don't have the context. The CGT Act, unlike the VAT Act, does not stipulate the currency in which taxes are to be calculated and paid. And so that creates a gap in terms of how the law is then interpreted. And that sort of drives the conversation. There are also instances, where there's some sort of mismatch, between the acquisition cost or the acquisition currency for the asset and then the settlement currency for the assets, which means the currency in which you then exit. And then there are also incidental costs in between, which may be in other currencies, perhaps in Naira. And so the mechanism for ensuring that consistency across all those different cost components and then consistency across the settlement of the associated tax needs to be clearly established, needs to be brought into the tax laws, just to ensure that investors have clarity in terms of investment decisions that they're making. And also some clarity also has to be provided in terms of setting costs, like the foreign exchange losses, what exactly happens to that. It's not explicitly stated in the law, even though as you can reach an interpretation based on provisions of the law as to what happens to those costs. So it's very important that those types of provisions are written into, or at least are legislated upon in some way, shape, or form. Whether it's a short-term reform or a long-term reform is very important. I think the other point is in relation to unrealized losses, and I think unrealized losses are very, very, very interesting. There's a lot of debate around the treatment of unrealized losses, both in Nigeria and outside the country as well. And this has been interpreted, differently in different jurisdictions. And it's instructive to note that in some jurisdictions, there are express wordings in the law that determine how unrealized losses are treated. And while some jurisdictions make it clear that they're not deductible based on provisions of the law, to ensure there's some sort of consistency between accounting and tax, in some jurisdictions, there's a recognition of the substance of the transaction and the economic impact, and a deduction of those losses are allowed because they are real losses and they have significant implications for businesses. I think the further point to that is the fact that, there also could potentially be a right of election in some jurisdictions, for instance, Mauritius, where companies can elect as to how they want their losses to be treated. So you decide very early on if you want unrealized losses to be within the buckets of deductible expenses, or if you want to view them from the perspective of anticipated rather than accrued expenses, which is not tax deductible. So I think it's important to drive that point home, which is exactly, how you've explained it. So
and just to cap it up, and thanks for that summary. So you then find that some of these positions can be taken by taxpayers based on interpretation of the current law. And we've seen, in working with a number of clients, we have seen a number of transactions where the tax law is actually much more permissive than you would imagine at first reading of it. And we've walked through some of those examples. In some instances, you would have to go to the tax authority for them to exercise the discretion. And sometimes also we have gone to the tax authority and they have proved to be very positive because they also know what's going on and they want to see to the survival of the Nigerian economy. In many instances, or in some instances, we have had to go to other approving authorities, whether it be the minister or the lawmaker. And so, for example, hitherto, unutilized capital gains losses could not be offset against gains. But the Finance Act of 2023, the version that was passed in May of 2023, actually included a relief allowing such losses to be deducted and carried forward until fully utilized, or 5 years, whichever is earliest. So you see that both the tax authority have been positive. The Minister for Finance, who is also vested with power to make certain determinations, have been positive. The President has been positive. We saw some of the executive orders that the President recently signed in the oil and gas area, which shows again that the President is positive. And then we've seen laws passed by the National Assembly, which show that they also are positive. So I think there's a case for the organized private sector, the Manufacturing Association of Nigeria, corporate Nigeria, clients and operators at large to actually engage with their tax consultants, with KPMG, if you like, to get some of these conversations ongoing, so we can get real-time relief on many of the issues that are troubling us. Like I said, the important thing is to preserve an entity's ability to retain cash that can be used in financing their business. So we could even consider, I know we do have an export expansion grant, but that scheme hasn't quite worked properly when it was introduced. Do we need to have some of that credit scheme by which companies can actually hold on a little bit longer, if you like, to government money? For example, take a withholding tax scheme, where today you are obliged to return to the government, to pay over to the government within 1 month of transaction. I'm just flying a kite here, and I'm not speaking for KPMG or anybody. This is just me with a wild thought. We could improve the working capital position of many companies by simply allowing them to hold on to the withholding tax they have collected for 3 months and pay to the government after 3 months. It would appear to be a very little thing. But to the company that's able to achieve additional working capital by virtue of having that money available for 3 months rather than 1 month, it could make a difference. And that's government providing relief to the taxpayer. So, there are orthodox and unorthodox ways of dimensioning this problem and bringing succor to companies. But the important thing is that we must understand that it is essential that Nigerian businesses have enough cash, enough finance to be able to stay alive. Because if you kill the goose that lays the golden egg, okay.
If you kill the goose that lays the golden egg,
you don't have to answer. I mean, the answer is flying in the wind. You can just move on.
Okay. Anyways, so thank you very much for that response. I think it's very instructive because, you know, it's a very interesting issue which corporates are dealing with. Businesses are dealing with this. This is reality. So it might sound like a lot of out of the box thinking, but you know, I think where the situation, especially from a tax perspective, right, and from a fiscal perspective, where there needs to be some out of the box thinking. And while foreign currency or foreign exchange is primarily influenced by monetary policy, I think we can all agree, or we can both agree, that fiscal policy does play a role. And with that in mind, we've seen some fiscal policy interventions in recent times. Historically, for instance, I wasn't practicing tax when this was done, but you know, there is a provision within the tax laws that is intended to promote diaspora remittances in terms of the exemption from tax for offshore dividends and foreign sourced income for individuals, for instance. So those types of things, those types of changes from a tax perspective will definitely have some influence on the demand and the supply for foreign currency, and also invariably have some impact on the FX rate. With this in mind, it's probably also very useful to just touch on some of the tax changes, because you've spoken about a few of them, right? You've spoken, about certain changes which can be implemented. You talked about a tax credit scheme. Are there any other, fiscal measures that the government can implement or has implemented in the past, which you think may have worked at the time and can be brought forward? So it'll be useful to, get some insight on that.
Well, yes, the government is always thinking about how to optimize the tax space. Like, there's a presidential committee that has been set up by the president to advise him on tax reform. And that committee has been working very hard. I'm not sure if they were involved in the set of 3 executive orders that the president recently signed. I think it's safe to assume that they were, and in which case we must say well done to them, because right from onset, Nigeria has been known to be a gas country and not so much of an oil-producing country. But yet, Nigeria is known in the world today for being oil-producing, not gas-producing, because we flare most of our non-associated gas. And so you can comment trains 1 to 7 of NLNG, but if you bear in mind that 100% of the gas that's being processed by NLNG is associated gas, So, and we know that Nigeria has reserves much larger than oil, with more provenance than oil in the gas area. And yet, it's only in the last set of executive orders that a fiscal framework is being published. I mean, again, riding on PIA, the Petroleum Industry Act, a fiscal framework is being provided for harnessing non-associated gas. So kudos to everyone involved in that. And I appeal and I hope that the government will go beyond the executive orders to actually publish this into law. Because like executive orders only have provenance for as long as the president wants it to. I mean, an incoming president can simply, amend it or dispose of it. But if it was enunciated into law, it will become much more binding. So I would appeal to everybody involved in that reform to have those orders passed into law. You also have the introduction of ease of doing business principles into the provision of contract reviews and awards, procurement contracts for the oil and gas industry. So over the last 7 years or so, the government of Nigeria has shown an interest in looking at the fiscal space and coming up with policies that makes it positive for operators across diverse diverse areas. So I've mentioned, for example, the introduction of loss relief for capital gains tax purposes. There are other areas where, through the medium of the Finance Act and through the medium of the recent executive order signed by President Tinubu, relief has been provided to taxpayers. And the government must be commended for sustaining that focus. It makes sense because the people in government themselves have a private sector background and they have a very good idea of where the shoe is pinching these operators. And so, unless you are expecting me to provide you with a litany or a list of some of those incentives, I think we're all familiar with them. We can just say that it appears that that drive, that focus towards making the operating environment friendlier appears to be being sustained by the current government. And I hope that that direction of travel will continue to be the case. There are so many other areas. Like I said, can we think of how to give cash back to operators? I mean, the manufacturing sector is struggling significantly. There's only a limit to which they're able to pass these costs on to the ultimate consumer. I mean, salaries have not been increased for the most part. Many states are not paying the minimum wage. So the ability of the customer to actually pay the share of wallet that is available for discretionary spending is shrinking. So if manufacturers cannot pass the costs, the increased costs to the end consumer, and they are themselves only margin operators, they're only making profit on the margins, those margins are being squeezed to the point where they are non-existent. If you want those companies to stay in business, something has to be done to the consumer, to the purchasing power of the consumer, and also to the ability of the manufacturing companies themselves to have cash to finance their operations. So I think that's where the devil will be in the detail of what can be done in that equation to relieve the manufacturing burden on producers.
Thank you very much.
And there are other sectors beyond manufacturing. There's also the finance sector, I mean, the banking sector, we've spoken about the oil and gas sector. There's so many other sectors that are involved in this conversation, but I'm just using the ones that come to mind in the course of the conversation.
Okay, thank you. I think it's quite clear that there needs to be some level of intervention in relation to ensuring that the Nigerian environment, business environment, is attractive enough to attract investment. I think that is quite clear in terms of the responses you provided. But those measures are long-term in nature, and they're very likely to benefit the economy as a whole. But there have also been some, whether I call them rather short-term measures which have been proposed. For instance, there was a proposal to implement an excise duty on foreign currency transactions by the Fiscal Reforms Committee, again, with the idea of disincentivizing speculative acquisition of foreign currency. And that was to, in a sense, a stick to prevent certain behaviors. There's also more recently, even though it's been suspended, the expatriate employment levy, which did gain a bit of traction. It was very interesting. It looked more like a revenue tool, but there was also the angle in terms of the increase in FX revenues which the Nigerian government would get, which would then translate to alleviating the strain on current supplies. So that's a very interesting point as well. And there have also been efforts in the past, things like VASE, for instance, where the federal government set up schemes to, recover assets in foreign currency, and collect taxes, undisclosed taxes. So just to get a sense of what your views are in terms of the successes or potential successes of these three schemes. So in terms of the excise duty, which has been proposed, it would be nice to see what you think. In terms of the EEL, the expatriate employment levy, which has now been suspended, it would be nice to get your views. And then also in terms of some sort of asset disclosure and asset, volunteering scheme, would that also be productive? Would it be useful to reintroduce such a measure?
Well, thank you, Goke. I didn't realize we were going to be lighting a fire under my seat. This seat was getting very comfortable, but now it's feeling very hot. But well, I won't shrink away from the questions. I'll take the last one first, and I hope I forget the other, maybe the earlier ones by the time I finish with the last one. Last one is probably easier to address. Look, let's be frank. We've been through the voluntary assets declaration scheme. We've seen 2 or 3 different versions of them between the last administration and now, between 2019 and today. The first one, the VASE scheme, the government put a lot of capital into educating the taxpayer, engaging with state tax authorities, employing people, training people. You saw those billboards when you enter the country, or even when you're even traveling locally, you had VASE desks everywhere. Wasn't a very successful scheme, not many off-takers. After that, there was another scheme, this one domiciled with the Office of the Honorable Attorney General of the Federation, where Nigerians living abroad were encouraged to go to Geneva to go file a return with a special office that had been created by the Office of the Honorable Attorney General of the Federation to make a voluntary remediation of taxes that were due to Nigeria. As you know, if I backtrack, Nigeria does operate a global income tax scheme where if you fall into the tax net in Nigeria, you pay tax on your worldwide earnings. And there was a view that many Nigerians had reporting obligations on international earnings that they had received, or even monies they had packed offshore and have not reported on either too. So the scheme encouraged Nigerians to come in from the cold. I remember the vice president at the time, Vice President Oshibajo, telling everyone that due to the protocol signed with the United Nations on both country by country and other disclosure schemes, the government is going to come into possession of a data bank, a database repository of Nigerians globally and where their assets were. And if you don't take advantage of these voluntary schemes, Nigeria is going to come after you. Again, nothing has happened of that nature. The scheme was not very successful. Should we be doing that again? My view is no. I think where we need to be is at the point where, if truly there are Nigerians that have packed wealth abroad without filing tax returns, you go after 1 or 2 of them, make an example. I mean, you can't keep promising people amnesty and they are not interested. And then you keep running after them, pleading, oh, I want to forgive you. Oh, I want to forgive you. Oh, come and pay your tax. I want to forgive you. And the guy is saying, bros, keep your forgiveness. I don't want to be forgiven. You got to get to a point where you're like, okay, let me show you that I can actually bite. Take 1 or 2 fat cats. And we keep hearing of such humongous amounts of money. People have $50 billion. There's a certain great-grandfather of Nigeria, one of our heroes of times past, who returns money to Nigeria from the grave every year, hundreds of millions of dollars, without let or fail, every year. That guy is still returning money. When are we going to go after the rest of that money in a very serious, articulated manner? So pick 1 or 2 examples like that. Go after them. Show that they are truly packing money abroad. Go after them with a big stick. I promise you, you won't need a vague scheme before people start rushing back to come and remediate locally. When you then see that there's public interest in remediating, yes, you can now think about how to make it easy for people to do so with minimal inconvenience. But to go back again with another offer of amnesty, what happened to the last 2 offers we made as a country? Not taken seriously. We don't even know how much was even raised from those schemes, other than the fact that it was an abysmal failure. So I think it's not a road that Nigeria should be considering. not unless serious effort is initially invested in securing or stimulating behavior in the right way. I liked hearing that Nigeria was charging Binance for tax evasion. That's the kind of big stick we want to see. You know, okay, it really doesn't matter whether Binance wins or loses the case. The important thing is that Nigeria has charged a global company that's operating in virtual currency with tax evasion. Remember, in the US, the same company was charged not only with tax evasion, but also with money laundering. We have not introduced charges on money laundering yet. It's just tax evasion. But you know, I like it because it's brought the tax front and center of everybody's mind. So if I'm trading in cryptocurrency, I don't need an amnesty scheme right now for people. If I'm trading in cryptocurrency, from what is happening to Binance, I now know that there may be tax risks in Nigeria. I will be speaking to my tax consultant and trying to make sure that I remedy my tax, especially when I'm converting my crypto into fiat currency, into Naira and dollars. That's the direction I think we should be traveling. Now, you were right when you spoke about the expatriates employment levy. Maybe less said about that, the better, because the organized private sector under NASIMA, and I must credit the president of NASIMA, Otumba Delioye, and his people and his team for the interface they had with the president and his team on the expatriate employment levy. The intervention by NASIMA has enabled the government to come to the table to say they will suspend that scheme and allow for wider consultation. So perhaps I should suspend any further criticism or compliments, as the case may be, until those consultations are completed. But let's bear in mind that companies are already complaining about the cost of doing business in Nigeria. We need to be lessening those costs and making it more optimal, more positive for companies to actually operate locally. Let them create employment. That's really what we want. There are thousands of Nigerians coming out of university every year with no certainty of employment. We want companies to come in here, open up brick and mortar, employ Nigerians, train them, pay them well, so that they can also participate in the wider economy and let the Nigerian economy blossom on account of those activities. So I'm not a fan of the EEL, as you can imagine. But like I said, let's wait for the government consultation process to be over. And then hopefully we'll have a much more positive framework. Hopefully we'll never hear of that scheme again. Hopefully. But again, you know, this is Nigeria, you know. So of course we're Nigerians and we want revenue. But you see, we also know where this is coming from. The government is challenged revenue-wise. And so we're going to have to think through how else to raise revenue for the country. But again, I'm not a fan of the EEL. Your first question was around the excise duty, wasn't it? On foreign exchange transactions.
Yes.
So
yes.
I thought it was a kite that the spokesman for the committee had thrown into the conversation, hoping to stimulate a conversation around the topic. In the event, there has not been a lot of conversation around the provenance of that duty. So, for example, under the Customs and Excise Management Act, it is the Customs Service that collects excise duty. So, are we now going to say that the customs, they're still struggling with tracking importers and exporters across our various porous borders? We even have all these militants coming in with nobody being able to stop them. They have their hands full dealing with the borders, some of which were only just recently opened. We now want them to also start tracking foreign exchange transactions so that anytime you do a transaction in FX, you also pay excise duty to customs. Is that really what we want next? I'm not sure that that's the direction we should be traveling. Now, could you then set it up such that the excise were collectible by some other agency other than the customs service. Like who? Central Bank. So central bank should leave its statutory duty as monetary for monetary policy and being a banker of last resort to the government of Nigeria, and then start collecting excise duty. I mean, do you remember the issue we had with electronic stamp duty and how big a mess that was until it was resolved in the last administration by having the law actually dealt with? And if you remember, it took 3 variations to the law before the electronic stamp duty levy issue was finally rested. And as we speak, there are still matters in court over that issue. We need to learn from our mistakes. So going to create another electronic levy or CBN will manage it, then somebody will sue you one day and say, oh, under the Constitution, CBN had no duty to do that one. It should have been done by... Come on, guys. Let's get serious here. So are you trying to discourage people from dealing with FX? You already pay a charge every time you transact in FX. Or you think CBN provides it for free. CBN doesn't provide you FX for free. You pay. And there's also a service charge payable to your bank, which they pay tax on. And besides the tax that they pay on the transaction, there's also the tax they pay on their profits. It's all coming from the same first, right? So ultimately, all you're going to do is make the FX more expensive. You still pass the same cost on to the same manufacturing companies and the same operators that are telling you that their cost of business is too high. So no, I'm not a fan of that either. Besides the fact that logistically, it simply doesn't make sense. How are you going to do it? And even if you can think through how you're going to do it, is that the right thing to do? So CBN should start chasing everybody buying FX now. They cannot make it available. They're telling you go and buy it from wherever you can. Then they'll start chasing those ones too. What have you sold? Come and pay excise duty. Come on, guys. Give me a break. I think you can read my body language, okay?
Clearly, you do have some strong views around these things, but you've been able to...
I was hoping I would have run out of time before I got to the last one, so that I won't have to express any opinion at all.
I mean, you didn't say too much, to be fair. So you've been very diplomatic in your response.
Thank you, okay.
Okay. So
but like
thank you very much.
Those are my thoughts. Those are not KPMG thoughts. And everything I've said in the course of this media chat are my thoughts on the subject matters that we've covered. They do not necessarily represent KPMG's opinion, although I believe that for the most part, most of what I've said so far is consistent with the way we think about these matters. Still, I think the call is on. We could see what NASIMA was able to achieve by engaging with the government. I would like to appeal to every single client here to engage with their tax consultants, engage with KPMG if you don't have someone else you are talking to. Let's articulate your views, your point of view. Let's speak to the right people on your behalf and get you the much needed solutions that you need in order to sustain positive operations in Nigeria. That's the key message I'm hoping that everyone will take away from this conversation today. There is relief available. We can walk through it and get it together. Okay.
Thank you very much. There are a lot of questions coming in the chat box. I think you've done quite a good job stimulating the minds of the listeners. So we have quite a lot of questions. We'll try to run through them. We don't have a lot of time, but just try to run through them. But there's still some questions which we want to discuss in a bit more detail. The issue around cryptocurrency is an interesting point because we did quite mention very briefly, that there should be some framework for tracking the activities of cryptocurrency transactions and also generating some sort of revenue. And all of that has to also be put within context to ensure that Nigeria, as a hub for cryptocurrency transactions, harnesses the benefits, but also puts a ceiling in terms of the negative impact on foreign currency. Now, we have a question on cryptocurrency in the chat, asking if you can confirm whether cryptocurrency has been legalized in Nigeria, and how it's possible that the tax authorities would discover individuals trading cryptocurrency in order to charge them. I believe there's a very short answer to this. It was cryptocurrency transactions were not illegal. I mean, I'll let Ajibola speak a bit to it. There was some regulation around cryptocurrency transactions by the CBN, but it was not illegal to trade cryptocurrency. In terms of how you track, that's where it gets interesting because of the plethora of peer-to-peer platforms, which makes it very difficult for you to track within the typical financial system. And also to note that, yes, Binance is currently one of the entities being reviewed. Was probably the only entity being reviewed by the Nigerian government that's been taken to court, but there are quite a lot of active platforms where crypto is traded. So it'll be important, or it'll be interesting to see how the federal government also deals with those entities as well. But I'll let Ajibola speak very quickly on the legal basis or legal status of cryptocurrency as well as the administrative processes for tracking.
Okay, it's a very good question, and I'm glad we segued back into crypto because I believe that as that segment continues to develop, and as this move away from the dollar as currency of the world gathers steam, you will find that alternative currency platforms will probably come to dominate. Maybe not the Bitcoins that we know of today, maybe something entirely new, but it's good to keep an eye on these trends because I think that's where the future lies. Cryptocurrency is not illegal in Nigeria, and it's not declared illegal by anyone. In fact, like I pointed out, the law was modified. The Capital Gains Tax Act was modified last year to include digital assets specifically as a class of assets, and they had crypto in mind. So it's not illegal to transact cryptocurrency in Nigeria. In terms of the second question about how the Revenue Service will come to know that you have made profits from a crypto trade and then tax you, I should remind the audience that it is not the duty of the FRS to tax us or to submit or to send us an assessment. That used to be the law many, many decades ago. But that law changed, and now the system that Nigeria operates is a self-assessment system where the taxpayer, I mean, think about it. How many staff does the FRS have? I'll be surprised if they have more than 10,000 nationwide. There are over 200 million Nigerians. There's no way 10,000 people, even if you aggregate all the tax authorities in Nigeria, the state tax authorities and the like, I don't think you will find that in aggregate there are up to 100,000 people. There's no way those guys can manage 200 million taxpayers if they have to send the assessments to each one of us. First of all, they have to go and find out what we have all earned, and then they then have to send us assessments. It's just not going to work. So the law puts the burden the other way around. It is a burden on the individual to make an evaluation of his income and expenditure in every year and to submit a return to the tax authority. In the case of an individual, the return will be filed with the state tax authority. In the case of a corporate entity, the return will be filed with the federal tax authority of his incomes and gains. So if you fail to deliver that return, or if you deliver a return that does not contain a true statement of your income and expenditure, then you commit a crime. And if the FRS becomes aware, they can then charge you to court for that crime, like FRS is currently doing to Binance, to say that Binance not only failed to comply with the law in relation to tax compliance, they also conspired with their clients to not comply with the law. Let me expand a bit on conspiracy. You cannot trade with Binance if you do not have an account with Binance. And Binance have a very robust KYC protocol that you go through before they will offer you services. So even if you are going through peer-to-peer or person-to-person as your model for engaging with your wallet and engaging in trades, they know who you are, they know where you are located, they know you are identifiable to them. Now, there's a question about whether or not that information should be made available to the regulators. And the answer is that for every operator that deals with the public, regulation requires that they should be accountable, and at two levels. Firstly, to the tax authority, and there are provisions in the tax code that requires banks and other such operators to provide data as requested by the tax authority. The second level is the Securities and Exchange Commission, and SEC has issued guidelines in relation to the operation of cryptocurrency. So there's also that. The third level is banking regulation, especially if you are mobilizing. So if your wallet is like a bank account, if you like. So if you are mobilizing deposits and keeping money, providing custodial services, then the central bank wants to have a view of that. Central bank has issued a guideline to banks, Nigerian banks, telling Nigerian banks not to provide support services to cryptocurrency operators. Maybe that's why some people think it's illegal in Nigeria. But no, CBN didn't say it's illegal. They just said they don't want it connected to the official banking market. So that's the last mile. And I believe that CBN itself is watching that trend because, like I said, Nigeria floated its own cryptocurrency. I think it was last year or 2 years ago that Nigeria did its own crypto, and Nigerians are being encouraged to utilize that digital asset. So it's not possible for CBN in one breast to be saying it's illegal and in another breast to be promoting its own version. So I think you will find that regulation will catch up eventually. We can also look at the example of what happens in other countries. In other countries, cryptocurrency operators have voluntarily submitted to regulation. When you think of the US or the UK, these operators, including their brokers and so on, have voluntarily submitted to regulation. And sometimes it's important for people to view them as self-regulatory organizations because it is in their own interest and in the interest of people participating with them that the credibility that comes with being regulated allows them to do more business with a wider network of people. For example, why would pension fund assets go into cryptocurrency if they are not regulated? So, I mean, it's not the mom and pop, it's not the guy selling $10 of Bitcoin. That's not where the money is. The money is with the aggregators, the pension funds, the large banks, and so on and so forth. Those are the guys that can move the market. They are market makers. They will not invest in those currencies if there's not some form of regulation of the other. So if the market is to grow, those organizations will have to submit to regulation at some point or the other, either by law requiring them or by them deciding in their own enlightened self-interest that they will do so. So, and then our tax then works there. You know, the framework is already there. Withholding tax that can be deducted at source, depending on the kind of transaction you're undertaking. And if you are charging service fee, you also pay your corporation tax on any resultant profits. You can use your wallet to buy goods or purchase services. When you do that, there's also VAT that's indicted. You may sometimes have to pay stamp duty tax on transactions. So the entire panoply of tax regulations would apply to digital assets in very much the same way as it applies to fiscal assets. So I guess that's the answer to the question, Bouquet.
Thank you very much, Ajibola, for that detailed response. There's a follow-on question which is connected to this. I think it'd be nice to answer it. So the question is, should VAT apply on gains arising from cryptocurrency trading in Nigeria? Given that VAT Act excludes interest in money and securities from VAT scope, the context of this question is that the FG is charging Binance to court for, amongst other things, failure to account for VAT on income derived from Nigeria. I believe what this participant is trying to say is that should the federal government be charging Binance to court for failure to account for VAT, where there's a VAT exemption in the Act for Interest in Money and Securities. Again, I'll let Ajibola answer this, but I thought
you'd answered it already. Okay, so at the end of the day, the platforms that you use to undertake these trades may be providing you with a service. So when you purchase cryptocurrency, I don't believe that there's a VAT charge on that. It's not a chargeable asset. However, if you are paying a service fee, remember I spoke about service fees in my earlier analysis of the transaction steps involved. If you look at the invoice you get from your traders, you'll see the component that's comprised of fees. Anytime you earn fees, there's always VAT on fees, and there's always a question of withholding tax, if any, on those fees. So I'm not privy to the details that FRS has on Binance, but I would believe that they had done a lot of review and a lot of due diligence. And remember that Binance actually came into Nigeria themselves and voluntarily provided some information to the Nigerian authorities that enable some of these charges to follow. So if there's a charge for refusing to account for VAT on their transaction, then it will be from the service fee. Remember that in 2019, I think it was, in the Finance Act of 2019, which introduced significant economic presence into the tax code as a basis for taxing foreign companies. If you are providing technical, management, and the like services to a Nigerian recipient, and you exceed the SCP threshold, you would fall into the Nigerian tax net for corporation income tax, for corporation tax. So on the income tax side of it, there could be an argument that all those foreign platforms that were trading and opening accounts for Nigerians that are residents in Nigeria have met the threshold for significant economic presence and must pay tax. And I can tell you that many global traders, not even crypto now, think of the Amazons of this world, think of Apple, and so on and so forth. Many global traders would fall into the tax net on account of that. And I can't see how Binance can be any different just because what they're trading in is cryptocurrency. They're just at the end of the day, they're just an exchange. They're an exchange where participants can come into the market to buy and sell, just like Jumia, it's just like Konga or Amazon. So very easily, I can see how they will have a tax, they may have a tax footprint in Nigeria. I would imagine that Binance will be talking to their tax consultants in Nigeria to see whether they indeed have achieved that threshold. And if they did not, all they have to do is provide FRS and the courts with information indicating that, yes, we dealt with Nigerians, but we did not trigger SCP. Neither did we charge service fees. So if you don't charge service fees and there were no service fees payable, no one can tell you that you didn't account for VAT on service fees. If you don't trade with Nigerians to the level of SCP, significant economic presence, then you also don't have an income tax reporting obligation in Nigeria because you don't have a fixed base. So those are matters of detail that I believe both Binance, their tax consultants, and the FRS will resolve as the case goes on. I hope that's a clear enough answer.
And that's very clear, very clear. Just to add that, you know, they do charge, most crypto platforms will charge you a fee for trading, and they might charge you a deposit fee, a withdrawal fee. So those fees are compensation for services, for supply of services,
Absolutely.
which, would trigger this VAT discussion.
Yeah,
The question,
that's why I asked the person that asked the question to go and look at this, the slip they will give you at the end of every transaction. You will see an analysis of all the charges there, and you'll be able to see what charges might be taxable in Nigeria, if any.
Thank you very much. We've run out of time, and we still have a few questions.
Have we now?
It's been a very insightful, very interesting session. We have quite a lot of participants. The numbers are still all-time high, which is a good indicator that people are engaged. So we will try to cover very quickly some of the additional questions that have emerged. There was a question here around reverse VAT. We'll probably have to take that in a different session. Or as you know, KPMG hosts this tax chat quite frequently. There will potentially be a separate session for VAT and indirect taxes. So we'll be happy to take that there. There's a comment here around the recent rise in MPR, which in turn affected the level of subscription in the government instruments. So this commentator says that that has been able to see increase in foreign inflows, but there is a concern that this could potentially crowd out players in the real sector. Essentially, the banks will rather put their funds in risk-free investments, such as treasury bills, rather than lend to the manufacturing industry, which would then enhance productivity. And what are your thoughts? I think that's a very apt comment in terms of what's going on, and we do see quite a lot of this. It's been a long-standing conversation around trying to ensure there's some balance between government being able to obtain resources for its operations, and then ensuring that at the same time it doesn't stymie the economic activities of real sector players like the manufacturing sector. We do want to see, for instance, the pension funds invest heavily in other risky assets as opposed to the conventional sovereign instruments and risk-free assets. But again, their businesses.
We'll know in a few hours once Mr. Cardoso comes to brief the press. There is some thinking around the fact that inflation has actually trended downwards in the last few weeks. At the end of the day, we're tracking a basket of items and the price movement of that basket. And some of the key prices have come down. Petrol prices have come down. Food has also come down, especially the staples that most Nigerians consume. So if inflation is trending downwards, that will send a signal to the MPC that their intervention last month is achieving the desired result. Now, there's some question as to whether they will increase rates, hold the rates steady, or decrease rates. A lot of factors go into their ultimate decision. But what I will say is that when the government issued those bonds at the end of last MPC meeting, they were oversubscribed. And there's a risk that you are right. There's a risk, the person that asked the question is right, that there's a risk that it might crowd out the retail sector, because banks will prefer to keep money in safe instruments, especially if you're getting returns coupons of about 25%. I mean, it doesn't get better than that. But is the bank going to take it higher? I'll be very surprised if they did. I think they will either hold steady or begin to mark a downward indicator. A lot also depends on the body movement of the US Fed. The US Fed has made clear that they're already at their max, so they're not going to be increasing rates either. There's so many factors, because if money is going to get attractive, if investment in US is going to be more attractive, then Nigeria has no choice but to increase rates so that we can at least attract some of that money. But if the US itself is plateauing or trending downwards, then we have more scope to breathe a little.
Okay.
So let's watch this space. Let's see what the MPC decides, and we'll take it from there.
Okay, thank you very much. I believe it's been a very interesting session, very engaging, very insightful. We came with the mindset that we're going to focus strictly on tax, but as is the case, you know, the conversations around foreign exchange would usually venture into economics, would usually venture into business, and would usually venture into fiscal policy. So it's been a very holistic session, very, very insightful. So thank you very much to Ajibola for agreeing, you know, even though he's quite a busy man to you know, serve as a panelist on this month's tax chat. So thank you very much. We do hope we'll have you, you know, in future chats as well. Also, thank you to the participants. We do appreciate your time. Thank you very much for making out 2 hours of your very valuable time to attend today's session. So thankful. We'll just say that, you know, there are quite a few questions which you couldn't quite take. And I'm sure a lot has been said and there's a lot that you need to think through. But feel free to reach out to us at KPMG. We're happy to engage with you and walk through your issues. That's what we do. We provide solutions to problems. We're happy to hear from you. So it's been a useful session. Thank you to also the team working in the background, organizing, planning, you know, sending the questions to me. It's been a very, very interesting session. So thank you everyone for attending. Hope to see you in future editions of the Tax Chat. Thank you.
Thank you very much, Goke.